Good morning, students. Today we'll see chapter 8, the third financial tool, that is trend analysis. So financial statement analysis has three parts, that is manufacturing account, income statement and the balance sheet. In this chapter we have been dealing only with the income statement and the balance sheet. And also, for the financial statement analysis, there are various tools that can be used, but in our chapter, for our syllabus, we have just three tools that are to be used. One is the comparative statement, second is the common size statement, and the third one is going to be trend analysis. So comparative statement is where we have to find out the absolute amount of differences. From that we found out the percentage of the difference, right? And in comparative statement we kept in a common size statement we kept a common base value, that is we took a common base value. If it is income statement, we took revenue from operations as a common base, treating it as 100, and from that common base we have found the other percentages. And in the same common size balance sheet, when it came to balance sheet, okay, so here we took total assets as the common base and treated it as 100, and based on the value of total assets we had to calculate the remaining accounts percentages. So this is how we have seen the comparative statement and the common size statement. The third tool which we are going to use is trend analysis. So here in trend analysis, how to go about is, so here first you will write all the particulars whatever is given in the sum, and in trend analysis we'll take the first year balances as the base year. That is, for example, if you look at here in this illustration 12, we have 3 years, okay. This first year all the accounts value will be treated as 100, right? So based on this value the remaining years will be calculated, and the base, whichever base year or amount we calculate, that should be treated as 100. The remaining will be in the form of percentages. So to move on, illustration 12, calculate trend percentages for the following particulars of Kuranji Limited. You have particulars related to this organization. So revenue from operations, other income, expenses. Here in rupees in thousands are given for 3 years, 3 accounting period, 2015, 16, 16, 17 and 17, 18. So again, income statement, it is not, there will be no change in finding out your profit before tax. That is, we have been doing like revenue from operations plus other incomes, which will give you the total revenue, minus expenses, that will give us the profit before tax. The same thing what we have been following for the comparative and the common size statement, the same should be followed here for calculating profit before tax. After that you have rupees in thousands. You just have to copy these values, just copy this table first, okay. So trend analysis for Kuranji Limited, particulars 2015-16, 16-17 and 17-18. So all these values, that is whatever is given in 15-16, 16-17, 17-18 are the ones taken from the sum itself. That is, 120 is your revenue from operations, 132, 156. The same should have been written, 120, 132 and 156. Again, next is you have your other incomes. Normally we should add the other income to the revenue from operations. So now While adding the revenue from while adding the other income to revenue from operations, we can take values from this table itself. Other income, we have 50, 38 and 65. So add up these values now. 50, 38, 65. 120 plus 50 is 170. So you get your total revenue as 170. Then 132 plus 38 you get 170. Again total revenue is 170. 176 plus 65, 221. So we found out the total revenue for all the 3 years. After that, you have to find out what are the expenses. So expenses 100, 135 and 123. So less expenses 100, 135, 123. So now you have to deduct this 100 from 170. So 170 minus 100 you get 70. This is your profit before tax. Here it is not mentioned as profit before tax, but you have to write it as profit before tax only. Okay. Then in 2016-17, 170 minus 135, so you get 35. Then 2017-18, 221 minus 123, you get 98 as the profit before tax. These steps are common for all the 3 tools whatever we use. Okay. Then comes the next one, that is trend percentages. We have to calculate the trend percentages, that is the sum, right? So now you have 2015-16, 16-17 and 17-18. So as I said earlier, your year 1, whichever it can be, your year 1 should be taken or considered as the base year, which means all the values related to that first year will be considered as 0. So now you will draw like this, like trend percentages 2015-16, 16-17 and 17-18. Now after this, you have to, as I said, you have to treat all the accounts balance as 100 for 2015-16, that is year 1. Okay, so this is our year 1. So we have to write 100 in all these places. Okay, after that for 2016 and 17, since this 2015-16 is the base, you will have 132, that is 132 for 2016-17 divided by 2015-16 value, that is 120 into 100. I'll repeat, 132 divided by 120 into 100. So you get 110. Likewise, 156 divided by 120 into 100, you get 130. I hope you got it. Previously in the common size statements, we have been taking one common value and divided all the remaining accounts by that common value. But now this is going to be the same, like revenue from operations only we are taking as the base and calculating percentages only based on the revenue from operations of first year. Okay, I'll repeat, 132 divided by 120 into 100, 156 divided by 120 into 100. So whatever value we get, we have to write as the trend percentages. Likewise, for the next one, we have 50 as our other income. Okay, this is our base year, first year. So now 38 divided by 50 into 100, 65 divided by 50 into 100. So we get 76% and 130%. Okay, this is only for 2016 and 2016-17 and 2017-18. Keep in mind, again 2015-16 all the values will be 100 only. That year is treated as the base year. Okay, next, total revenue, you have 170, 170 and 221. Now since this is going to be our base year, we have written as 100. Now 170 divided by 170 into 100, you get 100 as your trend percentages. Then 221 divided by 170 into 100, so you get 130. Next one is expenses. Now expense, again 100 is given here. Again we are going to take this as our base here. So 100. 135 divided by 100 into 100. So 135. 123 divided by 100 into 100. So you get 123. Okay. After that you got your profit before tax, that is 70. So this is our 100. This is our base year. So we are calculating this is 100. Now 35 divided by 70 into 100, you get 50 percentage. 98 divided by 70 into 100, you get 140. It should be 70. Okay. So 35 divided by 70, 98 divided by 70 into 100. So you get 140. This is how you need to calculate the trend percentages. It should be 70. Okay.